I mean, institutions are here. I mean, there are institutions that own the asset. We have institutional investors in our funds. There are institutions that own things like GBTC. But the big adoption wave is still coming. I mean, we are just at the knee of the curve if you think about an S curve. So the way an S curve works, it's a 30-year cycle for any new technology. The first decade, you get the first 10%. Think about that. 10 years to get 10%. In that next decade, you get 80%. I mean, just literally.
CEO and founder of Morgan Creek Capital, Mark Yusko believes that we are just at the beginning of the adoption curve and an avalanche of institutional capital is set to flow into the crypto space. Yusko points out the S-curve, which is the chart of adoption of new technology. Over the first 30 years of a new technology, the first 10 years we see 10% of total adoption. In the second 10 years, we see 80% of its total adoption. Yusko argues that we have just entered into the second 10-year stint of Bitcoin adoption in which it goes parabolic. Yusko is a renowned hedge fund manager with over $1 billion under management. He works closely with big institutions, so he knows his stuff. Make sure to stick around to the end of the video where Yusko breaks down the latest news on the spot Bitcoin ETF and why BlackRock is pulling the oldest trick in the book, suppressing the price of Bitcoin whilst buying up as much as they can before a spot Bitcoin ETF is approved and the price goes parabolic. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 10,000 others to become a better crypto investor right now. Now here's Mark Yusko with his Bitcoin outlook.
It goes parabolic, and if you've never read the book Great Boom Ahead by Harry Dent, you should. It's a great, it explains how S-curves work. The rest of his books are not that great, but that one was really good. And actually in that book, it's amazing. He wrote it in 1991. He explains S-curves, but then he also predicted in 1991 that the primary method of attaching to the World Wide Web would be a handheld cellular phone. So he predicted the iPhone in 1991. Most people didn't even know what the World Wide Web was. So that was a pretty good call. But the S-curve adoption that we're about to see, part of it is going to be clarity, regulatory clarity, and we got to get these bozos. I shouldn't call the guy who regulates me a bozo, but he kind of is. And we need the people who have, I'll call, bad motives, Operation Choke Point and all that good stuff. We need them out, and what we need is the acknowledgement that this is a global phenomenon, that this technological innovation, as we go from trust to truth, it's in 800 years coming. Think about that. This is an 800-year process. But it's going to happen, right? We're going to replace trust with truth. And I'll give you the quick example of this. So Scott Stornetta, who is the most cited guy in the Bitcoin white paper. If you go to the back and you read the footnotes, 3 of the 8 footnotes are his work. He and his partner were the founders. They were the co-fathers of blockchain technology. They literally had, hey, we have these blocks of information. We can chain them into, they created it. So I was talking to Scott and he said, when did you have this epiphany? He said, well, I was thinking about it. And it went something like this, that if you think about how you trust people, right? Let's say I lent you money, Abs. I would need Johnny to arbitrate, right? That it was a fair transaction, right? The Bank of Johnny. Well, but Johnny's corruptible. I could bribe him a little something to, get him to say that, hey, Abs, you borrowed 200 when you only borrowed 100. So we need Ellie to look over Johnny's shoulder. Oh, but she's corruptible. So then we need someone to look over Ellie's shoulder. He said, it turns out you need the whole world to look over the shoulder. Well, wait a second. I can do that with blockchain. And so instead of having the Medicis and the Rothschilds at the center of all of this, and the banking system, which skims, think about this, they skim $7 trillion a year. The trust system takes $7 trillion from all of us so that we can have audits and verified bank accounts and all that good stuff. We don't need that anymore. Blockchain, crypto eliminates that because we replace trust with truth. So we don't need Johnny to look over our shoulder and Ellie to look over Johnny's shoulder and everyone else on this call to look over each other's shoulder. We have trust. I mean, we have truth. We have permanent, immutable truth in a blockchain. And when Scott said that in this podcast we recorded, it's like, oh my God, that's exactly it. And so this isn't going away. And the regulators can bitch and moan all they want, but this technology is here to stay. And it changes the way we all interact and exchange value. We had the same thing with Bitcoin. It is not a coincidence that the exact peak of Bitcoin price in the last cycle was on the same day that they approved the futures ETF. And $1 billion went into that. Why? Because JP Morgan needed someone to be on the other side of them shorting the shit out of Bitcoin. Well, why would they short the shit out of Bitcoin? Well, because BlackRock hadn't gotten their ETF approved yet. So you need the price to be lower before you buy. This is the oldest trick in the book, right? When George Soros used to want to buy copper, he didn't go out and start buying copper. He went short copper and he spread rumors that copper was the worst thing in the world to push the price down. Then he would go buy a lot of it. That's how it works. People have been doing that forever. You watch what people do, not what they say. It's like if you follow Goldman Sachs research, I shouldn't pick on Goldman Sachs, but it's really easy. You look at what they say in their research report, and you look at what they do in their prop trading. Oh wait, they don't do prop trading anymore because what the hell is it called? The bill that got passed after the global financial crisis. They still do prop trading. So if you watch what they do prop trading, it's always different than what their research says. Well, it's because they need someone to sell to them, which would be their customers, which is not a really good way to run your business. But anyway, so the first they ignore you phase lasted about 6 years. Then they laugh at you phase lasted about 6 years. And then they fight you phase probably lasts roughly equivalent. It doesn't have to be that, but that's usually the way in history that's worked. Then you have this 4-year cycle in Bitcoin and other crypto, and that's related to the halving. And look, it's not a coincidence that in 17, right, which was the previous peak cycle, Larry Fink was out there saying, this is bad, this is money laundering. And I used to laugh at him when he'd say that, but then I didn't realize he had inside information because they were the ones doing all the money laundering. So now he gets up on TV a month ago and says, it's here to stay. The institutions are going to buy it. And you, everyone listening to me, should own a little. And this was crazy that he said this out loud, to protect yourself against devaluation of the currency. Right? Everyone's talking about inflation. There's no inflation. You had that chart of the inflation spike and everyone's trying to say, oh, it's just like the 70s. No, it's not. The 70s was about demand pull inflation. Excess demand, limited supply, price of goods goes up, right? We had the oil embargo and Iran-Contra scandal. Got it. It's because the boomers, right, my brethren and sisterin, we're all building houses and having kids and taking vacations and spending like crazy. And there was excess demand. Okay. This is not that at all. This spike in quote unquote inflation that happened after 2020, it's because the cult of Kelton, Stephanie freaking Kelton, ridiculous, convinced people you can print as much money as you want and it doesn't matter because we're the world reserve currency. Are you joking? If I have $1 trillion, and I print another $1 trillion, what just happened to the value of my money? It just went down in half. And that's exactly what happened. We've been a republic for 247 years. 244 years, 10 trillion. 3 years, 10 trillion. We printed half of all the money in the history of the republic in 3 years. The super rich people. And so that money that was created never circulated. You look at the velocity of money. it's a one direction trip down for the last 35 years. And it's because the average person doesn't have any money, right? They don't have $500 for an emergency.
Wow.
And so they handed out $1,200 a person right after COVID, after the lockdowns. And that helped, right? People felt wealthier and people spent. But that's gone now. And now that's why they got to talk about loan forgiveness and UBI. Because if that money just sits on bank balance sheets, all it does is make bankers richer.
Mm-hmm.
But that's why the Fed exists, and the Bank of England, and the Netherlands Central Bank. Remember, the Fed, not federal, no reserves. It's a private corporation owned by wealthy families to support banks. That's why it exists. And by devaluing the currency, and you guys have heard me talk about this, according to Zillow, my house went up 40% in the last 2 years. It's bullshit. My house did not grow. It did not get more efficient. It actually wore out. I had to put money into it. The money got worse. And when the money gets worse, the things that we try to buy with it seem more expensive, but they're the same.
That's right.
Right? The gallon of gas I put in my car does the same thing. Well, actually, I don't have a gas car anymore, but if I did, it would do the same thing. But it costs more because the money's not as good. The lockdowns were not an accident. We took literally the flu, right? The seasonal flu. We renamed it. We locked down the whole world. Why? It was a transfer of $3 trillion.
Mm-hmm.
Just let that number hang there for a second. Remember, a trillion is $1 every second for 31,710 years. It's a long time. 3 trillion went from the people getting those handouts to the people at the top of the plane. Jeff, Bill, George, and you know who I'm talking about. If you don't have to use our last name, it's a pretty big deal. But those people benefited, and this was as corrupt. Remember when Trump was taking credit for cutting corporate taxes?
Yeah.
Remember that? His idea has nothing to do with Trump. Okay. Who did that? Warren Buffett. How did Warren do that? Warren had this thing. He said, I'm going to buy this stock, Apple. I hate tech, but I'm going to buy this stock, Apple. But here's what's going to happen. You, Congress, you're going to pass this law to cut their taxes if they pledge to buy back my shares. Because Apple's not actually growing anymore. Apple's income this year is the same as 2015. No, Mark, the earnings per share is way up. No, the share count's way down. They bought back shares. The actual earnings, their earnings growth is zero. So it's a manipulation. It's a figment of people's imagination. Warren gets super rich because they're buying his shares and he never pays tax because his dad was a famous congressman years ago and they got a law passed. It's the only company in the world that will never pay tax. Berkshire Hathaway, it's amazing. And I'm not criticizing Warren Buffett. I'm just telling you, he's not the grandfatherly value investor pining over balance sheets. He's the greatest financial engineer in the history of financial engineering. And he's a really good politician. Remember when Bank of America was about to go under? Who got the call to lend them money? He said he was
Berkshire?
in when he got the call. Goldman Sachs, Warren. He gets deals that other people don't get.
So there's Mark Yusko of Morgan Creek Capital with his Bitcoin outlook. It's always an honor to get such profound perspectives from someone as deeply involved with institutional investors as he is. He has a gauge on institutional sentiment that not many have. The journey of Bitcoin's adoption and the strategies being employed by big players like BlackRock are undeniably compelling facets to watch as we navigate the crypto space. If Yusko's insights resonated with you and you're keen to staying ahead of the curve, my daily 5-minute crypto newsletter is tailor-made for you. Not only do I bring expert predictions, but also provide deep dives into on-chain data and the latest breaking news. The link is in the description, so don't miss out on joining our community of over 10,000 informed crypto enthusiasts. If this video provided value, do me a favor by hitting that like button, sharing with friends and colleagues, and subscribing for more enlightening sessions like this. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.